Now, another popular indicator is the stochastic indicator. And there are a lot of different trading patterns of how you can trade them and what you can do. But let's just look. This is a live market today. It's going to continue to move. But one of the things that you should notice is here's a short-term stochastic, a 733. Here's a 1431, and here's a 21. Now, what you might see is that sometimes all of these work at pretty close to the same time, and at other times, the way the stochastic is mathematically calculated, here the short term's already turned over, the long term doesn't turn over till over the top, and then the longer term turns even later. So you get this challenge of which one do you use and how do you set it and all these different kinds of things. You can also change with the data patterns, which will allow you to pick all kinds of different data to start. I'm going to show you that here real quick. Okay, I can't compress all of this with settings in Instant, but let me show you all the different ways you can calculate each of these numbers. They can be simple, exponential, weighted, smooth, volume weighted, a whole bunch of strange and wonderful things, attenuation, Gaussian, Butterworth. And you can do the same thing down here with the second number. You can also pick the data that you want. You've got all of this kind of stuff, so you have all these options. And then from there, you can decide whether you use the %K, the %D line, or use both of them, or you use the spread. So I think you can see that using a stochastic indicator is very difficult. And if you get in a very big trend, these indicators will peg at the top or peg at the bottom. So as an oscillator, it does give you the turn, but it gives you lots of whipsaws. And one thing I did want to share with you is that all those different calculations don't mean much of a difference on the same length of stochastic, the 1431 here. They don't make a lot of difference, but they do change. This is simple, exponential, and weighted. So you see you get a different area. So again, this is how the confusion about indicators work in what they're doing. Now, the other thing you can see, we've had a long relatively long trend here, and you see everything is pegged at the bottom. So a lot of people just play the move from one side to the other. A little hint, there's a thing called a stochastic pop or a stochastic drop, which is when you get below the line here, it's often a very good idea to stay in. Now you get short-term drops and you get long-term drops, but this is why only one indicator doesn't work well for people.